Two people hit $1 million net worth. One becomes financially free, the other becomes financially trapped. And the scary part is most people don't realize which one they become until it's too late. Walk into Liam's house and nothing screams wealth. It's a normal neighborhood, simple kitchen, and a 4-year-old car he plans to drive into the ground. But Liam sleeps well, takes vacations, and doesn't panic when markets crash. He's worth nearly $2 million. Now walk into Harry's house. Everything looks upgraded: luxury car, renovated kitchen, a portfolio he checks constantly. From the outside, it looks like success, but inside it feels like pressure, stress, and uncertainty. He's worth far less than Liam. Same city, same income, same time, but one built real wealth and the other built the illusion of it. By the way, I'm Gigi, and I spend an unhealthy amount of time studying why people who should be financially free end up stuck. This isn't about how to get rich. It's about what happens after you start making money, because that's when the traps change and they get expensive. The first trap is upgrading your life instead of your wealth. You get a raise, and before the money even hits your account, it's already gone. Better apartment, better car, better everything. It all feels justified because your brain sees it as progress, not loss. You tell yourself, I worked hard, I deserve this, and that loop never ends. You upgrade one thing, then everything else starts to look out of place, so you upgrade that too. Without realizing it, you lock yourself into a lifestyle that consumes everything you earn. Be honest, if your income doubled tomorrow, would your savings double, or your expenses? The fix is simple, but uncomfortable. Every time your income increases, your investments increase first, not later, not what's left first. The second trap is overconfidence after success. You make a few good investments, they go up, and your brain quietly tells you that you're good at this. So you take bigger risks, concentrate your portfolio, and start chasing wins. And for a while, it works, which makes it even more dangerous. Because now you're not investing, you're gambling with confidence. A rising market makes everyone look smart, but when things change, that's when reality shows up, and by then you're usually too exposed. The solution is boring on purpose: stay diversified, automate your investments, and stay consistent. If investing starts feeling exciting, that's usually your warning sign. The third trap is falling in love with one winner. You buy something, a stock, a property, a business, and it performs well. Suddenly, it's not just an investment, it's part of your identity. Selling feels wrong, like you're giving up on it, so you hold and hold until it becomes a huge part of your net worth. At that point, you're not investing anymore, you're exposed. The uncomfortable truth is you don't know whether that asset will keep winning or collapse. The fix is to never let a single investment have the power to break your future. At this point, you might be thinking they'll just avoid these mistakes, but that's exactly what everyone thinks. The problem is these traps don't feel like mistakes when you're inside them, they feel like smart decisions, and that's why they work. The fourth trap is the invisible tax drain. You make money, but you don't keep it, not because of bad investments, but because of small decisions like selling too early or ignoring tax strategy. Over time, these small inefficiencies compound into massive losses, sometimes hundreds of thousands, without a single market crash. The key is to think in after-tax returns, because what you keep is what actually builds wealth. The fifth trap is fake diversification. You own multiple funds and accounts, which feels safe, but when you look closer, it's all the same exposure, same companies, same market. So when things drop, everything drops together. That's not diversification, it's concentration in disguise. Real diversification means owning assets that behave differently under stress. The sixth trap is being rich on paper but unable to use your money. Your wealth is locked in your house, retirement accounts, or long-term investments. So when an opportunity appears or an emergency hits, you can't move. You're wealthy, but not flexible. The solution is maintaining liquidity, because opportunities don't wait. The seventh trap is panic when the numbers get big. When you had $10,000 invested, a drop didn't feel life-changing, but when you have $1 million, a 20% drop feels like losing to $100,000. Your brain reacts to the dollar amount, not the percentage, and suddenly you feel the urge to act. That's when people sell at the worst time and miss the recovery. The fix is to decide your strategy before emotions show up, because in the moment, logic disappears. The eighth trap is working more than you need to. Working hard got you here, so you keep going: more hours, more stress, more income. But eventually, your investments are already doing the heavy lifting. At that point, you're not working for wealth. You're working out of habit, and the real cost becomes your time, the one thing you can't earn back. The ninth trap is neglecting protection. As your wealth grows, so does your exposure to risk. One accident or lawsuit can put everything at risk. Yet most people ignore this because it's boring until it isn't. Protecting what you built is just as important as building it. The final trap is having no plan for what happens after you. It's uncomfortable to think about, so most people delay it, but that delay can destroy a huge portion of your wealth through taxes, legal issues, and confusion. Building wealth is one skill, but preserving it across generations is a completely different game. Go back to Liam and Harry. The difference wasn't intelligence or luck. It was awareness at the right time. Wealth doesn't destroy people, it exposes them. And right now, you can see the traps. Most people will ignore this and slowly become Harry. The question is, will you? If you actually want to build real wealth, not just the appearance of it, subscribe, because this is what we do here.